Congratulations, you are ready to close and sign for your house. This is an exciting time in the entire home buying process. All the hard work, maybe even some of the videos you've been watching, explain to you how to get to this point is finally happening. In this video, I'm going to be talking about what happens on closing day, what you can expect, so that way when you get there, you know what to deal with, and it'll be a smooth process for yourself. So my name is Seanu Uyehara. I'm an area manager with Geneva Financial, helping you understand and how to get your mortgage right for over 15 years. You can hit the description below. There's links to more information, as well as my email address in case you have any questions or if you need a second opinion. That is free for you, being a great subscriber and a viewer to my channel. We just want to help you out so that way you get the right mortgage and you're doing what's best for yourself. Now, the closing day is a very, very fun time. You've put in all the work, like I mentioned. You got pre-approved. You finally got your offer accepted, especially with the craziness that we've been seeing in these markets lately with multiple offer situations, and you're finally ready to close. So leading up to the closing date, there are a few things that will take place. One of them will be a final walkthrough on your house. This is a very, very important part because this is your last chance when you go through the house. Is everything in the home that was supposed to be there? Sometimes sellers have taken down chandeliers or fixtures or TVs or just things that maybe you assumed was going to be part of the sale that they are taking. I've had clients that did walkthroughs that they wanted refrigerators left behind. There were transactions where there were nice chandeliers that were in living rooms that people wanted the seller to keep them there, but the seller was taking it. It was never negotiated. This goes back to picking a good realtor up front, because when you go through the house, if there's certain things that you want there, you need to make sure that you're negotiating that, or it is very clear and it's in writing that those items will be left behind. We've had instances where there's refrigerators in the garage, things in the backyard, just so many of these items that you might not even think to ask for that may not be part of the sale. So just make sure you're doing your due diligence up front with your realtor. Things that you want left behind, make sure it's there. Now, on the flip side, I've had instances, this is back in the day when we had a ton of foreclosures, that people would do walkthroughs. You'd have houses that would get vandalized. You would have people that were breaking into the homes. They were pouring concrete down drainage and they would flood the house. There were times where people would steal the AC units. They would steal the copper out of some of these appliances. So the final walkthrough is a very critical piece to the entire transaction. Don't skip that part, and make sure you do it before you sign, because once you sign your loan documents, and let's say your lender funds the loan that day, they may not be able to pull the wire back in time to hold the transaction up. So you want to make sure that you're doing that piece and make sure everything is still there. If there's things that are missing, your agent better hold up the transaction and make sure you get it fixed prior to closing. So your final walkthrough, that's typically going to happen about maybe 1 to 2 days, or maybe even the day of your signing, depending on what time you're signing. So that way you can do it as late into the deal as possible to make sure everything's still there. You're also going to get your closing disclosure statement. And what a lot of lenders are doing these days, they're working through an electronic system to where you can sign things online, you can acknowledge things online, and through most closing packages these days, you can sign almost half, if not a little more, of final loan documents through an online portal. Now, I've done that on a few of my properties where when we get to the final signing, you'll log into a portal, you can go ahead and sign and acknowledge all of these disclosures that have to be signed, and you'll get what they call a closing disclosure statement, or a CD. So your CD is basically the lender giving you kind of your final numbers before the final signing goes down. You'll see your interest rate, you see any closing costs and anything that's associated with the transaction as your final breakdown. Now, when you think back to the initial part of the transaction, when you go into contract on a house, you received what was called your LE, or your loan estimate. So that initial loan estimate gave you the initial figures. A lot of it could have been estimates based on the sales price of the house, or maybe sometimes we don't have all the fees from the title or escrow company that we're working with. So some of those items will be ballparked just to get the disclosures out to you so that way you can acknowledge what the transaction looks like and move forward. Now, typically what will happen if a lender is doing any sort of initial disclosure, if they don't have all the fees accurate, they will over exaggerate what the fees are, so that way you know that the fees won't be any higher than what you're signing. So whenever that happens, at least you can get an idea of what the worst case scenario is. But for the most part, with a lot of the integrations and a lot of the technology that have been progressing over the years in mortgage industry, we're starting to get these fees a lot faster, and a lot of them we can now estimate and ballpark a lot quicker than what it was 15 years ago. So that process has definitely streamlined itself over the years. But now when we look at your closing disclosure, again, that's going to be your final numbers. Everything on there. There still may be a pad. That way, if there's any additional costs or days of interest that somehow the file maybe rolls over a couple of days, they don't have to go back to you as a lender to ask you as a client and say, hey, Joe, I need you to wire in $12 worth of interest because we underestimated our final numbers. So there's typically a pad of anywhere from maybe $200 to $500 on the final statement. That way you get some money back after everything is finally settled. So you'll get your numbers, you'll do your walkthrough. And if you have any questions at that time, make sure to ask your lender. This is not a real estate question. You want to call your lender up. Hey, why am I having to come to the table with $500 more than what you told me it was? You want to address those things as soon as possible because the final signing, everyone's pushing to get this deal done by a certain timeline based on the contract. And it's not to say that there are things that could be wrong. Sometimes it could just be a clerical error that does come up because again, the title company has to balance with the lender. And usually with every lender, they have what's called a closing coordinator or a doc drawer or a funder. So they have an entire department that deals directly with the title company in order to make sure that their numbers balance out. That way you can sign and there's no issues when it comes to the final signing. So again, whenever there's humans involved, we always have to account for some sort of small error amount. And sometimes those things, there may be a difference, but typically they get fixed so quickly that most parties never know that there even was an issue. That's kind of the crazy thing when you think about the mortgage industry is that there's so many things and people behind the scenes that you never talk to or you even deal with that are working hard to get your loan closed. So if there's something that a lender calls and asks you for, don't chew their head off. Just know that they're doing everything possible to get this done. And most lenders are closing hundreds, if not thousands of transactions on a regular basis. So they're trying to do everything possible to make sure this thing happens. And again, more often than not, you never know that there's an issue because we either take care of it so quickly or the lender's team or the title team or the escrow team, they're just so good at their job that they can recover and fix these things without any other party knowing, which is great. And that's why it's always good to work with great people because I've been on the other side of that as well, where there have been issues and the title officer or the escrow officer is just such a pain to work with that they're always fighting with our team to get deals, to get the information, or vice versa. I've worked at companies where our funding department was terrible. We would always have to stay on top of them to get the funding done in time. And sometimes we would miss that. And now you as a client, you have to suffer because that's one more day that you're not moving to your house and you probably got movers aligned and all this other stuff that comes along with moving into a new property. So there's a lot of things that go on. And that's why you always want to make sure you're working with a great lender. And it's not always based on interest rate because the interest rate doesn't make somebody good or not. All it means is that they're just charging you less money to get a deal done. But usually when you pay less, you're sacrificing service, you're sacrificing quality, you're sacrificing something on the transaction. And a lot of times we hear deals blowing up in the 11th hour. And more often than not, it's because of the lender didn't do their job right. So again, even if you got a really good interest rate, does it really matter if your lender doesn't close on time, if your lender can't get the job done? And most importantly, fund your loan. You don't want to go to the signing and your lender tell you, oops, we calculated your income wrong. I'm sorry, you don't qualify for your house. And you'd be surprised how many times this happens every single day. I just had a realtor call me yesterday for a client that went to a new home build and they were supposed to close in their home. And I think they're about a week or so out from closing. And the lender called the agent and said, look, your client doesn't qualify right now. They have to pay off a $20,000 credit card in order for this to work. And they said, well, what's the other option? They said, there is no other option. Either they do it or tough luck. So now this client has to come up with another $20,000 to pay off the credit card, or they're going to lose about $30,000 or $40,000 that they've already put in upgrades to the house. So again, they got a good interest rate, but the lender didn't do their job and this deal's about to blow up. And that client, unfortunately, is going to lose quite a bit of money. And there's no recourse for it because when you buy a new build, you're signing a contract that the builder writes on their forms. They're not using a general real estate approved form that most MLSs across the country you go by. They're using their own form. So if you want to take them to court, good luck. You're probably not going to have the money to fight them and you're probably going to lose. That's the unfortunate side. If you don't believe me, you can Google some of this stuff and you can see these horror stories that people have dealt with builders, and it's always unfortunate and the buyers end up losing. So be careful about that stuff. Make sure, again, I always talk about this, have good representation, have a good realtor, have a good lender that's going to look out for all of these problems that you may not be thinking about because the process is such an emotional process and you're excited to get into your home. You might be blind to certain things. And again, again, it's your money. It's going to cost you thousands, if not maybe tens of thousands of dollars. So when you get to the final signing, there should be no questions at this point. You've reviewed the loan estimate, you've reviewed your closing disclosure, you've done your walkthrough. At this point, it's just a formality of signing what other documents that have to physically be signed, because not everything can be done electronically. And also some of these documents have to be notarized. So you're going to have a notary there as well, just to make sure that you are who you say you are. There's no fraud. Make sure you bring a form of identification, because the notary is going to need that information from you. Now, here's another thing. If you're not, let's say, in the city where you're buying a house and maybe you're relocating somewhere, that's totally fine, because what will typically happen is you can sign some of those documents online, like I mentioned, and then what they'll do is they'll coordinate with a mobile notary where someone can come and meet you where you are. We've had clients that were overseas in the military that have had to go to consulates to sign. We've had clients that were on vacation, literally signing at Starbucks or before their plane takes off. So it's doable. You just have to communicate with your lender and we can make it happen. You don't necessarily need to be in the town that you're buying and signing in order to get a deal done. There was even one crazy story that I heard. It wasn't my client, but a loan officer had to fly to Hawaii to have a client sign and fly back the same day, because there is no overnight. It's a 2-day process to get documents back and forth, and they would have never made the closing date. So it was actually cheaper and more time efficient for the loan officer to fly there, get the doc signed, and fly back. Crazy deal, but there's things like that that happen all the time. But that's just what we do here in the industry to make deals done so you can get into your house. Now, once you're at your final signing, depending on what part of the country you're signing in, sometimes you'll have attorneys, sometimes you won't. You'll just have a title and escrow company that will handle everything, but you will have a third party there kind of facilitating the transaction and the signing at that point. So again, if you have questions, make sure your lender's available. But in my opinion, 90% of all the questions should have already been answered. So there shouldn't be anything at your final signing that catches you off guard. But if not, more often than not, realtors are there. Sometimes loan officers will go to their signings. And again, they'll be there to answer any questions. But I always feel that if we do a good enough job up front, preparing you and really detailing out the signing process, you shouldn't necessarily have any questions there. It should be an easy process. Back in the day when I got in the industry, a signing could take at least an hour. I mean, you would sign probably 100 pages worth of documents. Now, I think the last house that I bought, I think I did my signing online. That took maybe 5 minutes. And then I drove to a title company to sign, and that took maybe another 5 minutes to sign. So the process has become very, very streamlined. We've eliminated a lot of paper waste that I think we used to just completely throw stuff out back in the day, and go figure. And that's why we had a crazy real estate crash. So all that should be easy to do. And then at that point, you're either going to bring in a cashier's check or you're going to wire your funds in. We typically always have our clients wire in money, because the cashier's check still may take a couple of days for that to clear in the bank. But we want to know that when the wire goes, the money's good. So that way the title company can verify they've received the money. They can fund the loan. We can verify and record everything and make sure that you're good to go, and they can give you the keys to the house. The title company will also make sure that there's no other liens or any last minute issues that come up. We've had some of those issues where we've had some liens that weren't caught up front that showed up at the last minute that held up closings. So the title company is also doing their last minute checks, double checks, triple checks, just to make sure that when you close on the house, there's no other liens and the property is truly yours. You're doing your walkthrough, again, making sure the house is still there. It didn't burn down. There's no floods. There's no leaks. The AC unit's still there. And again, it's just really those last probably 72 hours can get really hectic, because there's a lot of things that need to get done within that time in order for you to close on your house. So hope this video helps you kind of give you an idea of what you can prepare for. Again, don't be afraid to ask questions throughout the transaction. This may be your first time buying a house, or it could be your 10th time buying a house, but the process could be a little different depending on who you work with. Don't be afraid to ask. If you have any specific questions that I can help you with, shoot me an email. I'd be happy to chat with you and just give you my opinion and just make sure you're getting the right mortgage. So thanks for watching. Subscribe to this video, and I'll see you on the next one.